You think VA financing is better than conventional? You're right. Sometimes. Look, the reality is VA financing is incredible. Our veterans, they deserve the best. They really do. Whether active duty or veterans, we appreciate all military. But I'll tell you this, from a financing standpoint, VA is really, really great. But conventional, sometimes it might win out. And here's why. So VA financing as a whole, let's just kind of hit the highlights of why it's really good. It's 100% financing. There's no MI. It's no loan limit in terms of, you can go into the jumbo, you can buy $1 million home for 100% financing. That's awesome with VA. Rates are really good. So that's awesome. It doesn't hit credit quite as hard. So if somebody's got a little lower credit score, the VA is not going to punish a conventional loan might. Really, that makes VA sound pretty awesome, and it is. But here's the catch, or here's the reverse, right? So conventional financing might win out would be if somebody does have money, is putting down a big down payment, then conventional financing might win for these reasons. One is VA has a funding fee. I mean, yes, if the veteran on the loan has a certain amount of disability, that funding fee can be waived. But if not, that funding fee is hefty. It can be 2 to 3% and even over 3%. Again, that depends on down payment and things change. But the reality is that's expensive. And so if somebody's putting down a significant amount of a down payment where maybe they don't have MI anyway on the conventional loan, suddenly that benefit of no MI on VA, it's kind of neutral at that point. Without having that funding fee, all of a sudden conventional gets a lot more attractive. If the credit score is good and they're putting down a big down payment, they're buying in a good area like North Texas where there's a lot of data, they may get an appraisal waiver. So you don't have to get a VA appraisal. That's also good. So from a fee standpoint, rate standpoint, a lot of those things may come into play where the conventional just might win out from a numbers perspective. Another reason why conventional might be better than VA financing is if you're buying a home and you are a veteran, and this may be a stepping stone, and this may be a home that you're here for 2 or 3 years. So we see a lot where contractors may come in, they get a project that they get put on, they got to do something though, they may go somewhere else. And then along the way, they've hopped and they've acquired homes in like Dallas, for example, live in it for 2 or 3 years. And then when they move, they keep it for rental property. Well, if that's the case, maybe conventional financing works better so they can save their eligibility with their VA and not tie it up on a temporary home, and instead use that VA on the next dream home that they buy that's going to be 2x, 3x more expensive. We've seen that scenario. The other thing too is if they know they're going to end up, like we've had somebody go from Dallas to Hawaii, they know the cost of living or the homes in Hawaii are significantly more. So again, they saved their VA for that purchase and didn't want to tie up the VA in this Dallas home. I think those are really good reasons. For condos, sometimes if you're buying a condo or something that's maybe even townhomes that have their bylaws and everything's make them condos by definition, they may not be VA approved, and therefore you have to go conventional. So it's not necessarily that conventional is better. You have to go with that. I hate to say this. There are realtors out there, and I don't agree with them. There's sellers and realtors, listing agents that will shy away from offers if it says VA financing. So maybe if it's a really competitive market, conventional financing might get you the winning bid, if you will, or might help you win that contract. That's certainly one thing. And then lastly, well, not lastly, but the other part is if it's a second home or an investment property, you don't have an option. Again, that doesn't make conventional better. It's just VAs for primary homes, right? When you buy a VA or when you buy a home using a VA benefits, it's got to be for a primary home. And then jumbos. I would say that again, jumbos, again, big loan amounts. Let's just use $1 million for an example. That's going to be the numbers would have to speak for themselves. We have to run the numbers, but I say VA would win out a lot in that if somebody wants to keep money in their pockets, because again, you can do 100% financing, but if somebody has the money to put down, I think it's good. So overall, VA is incredible. But I would say don't just come in blind and say I'm doing VA just because I can and I have the benefits and I'm going to use it. I think let the numbers speak for themselves. If somebody has good credit, money to spend for down payment, I think that's when you start saying, okay, let's look at the benefits and pros and cons, and even the lower down payment stuff like 5% or 3% or something like that. Let's at least run the numbers and compare and just make sure that we're really putting you in the right program for the right reasons. So if you do have questions, as always, the mortgage team is here to help. All you gotta do is reach out to us, call, text, whatever you want to do. And again, we're here to help and just make sure we shoot you straight. And I always ask, just remember, as always, when you think mortgage, think Mark.